So let's go over some ideas about how the market works in general and how it works going forward. So up here on the screen, you've got this box right here that's showing the people in the transaction that represent the insured. You've got the insured themselves and their families. You've got the agent, who is the life insurance producer. And then you've got a broker that is brokering the policy on behalf of the family. Then below that, you've got people that represent the investor, represent the buyer. This is the investor, a fund, which a fund just has a bunch of investors in it and they pool the money. And then you've got a provider. A provider acts really a lot like a title company in the transaction, where they make sure all the correct paperwork is filed and they work with the fund to make sure closing and escrow work goes smoothly. Now, one of the ways that people sell their life insurance policy, and I'm sure we've all seen the ads on TV, is what we like to call the low information arbitrage approach. And what this means is you've got a fund or a buyer trying to buy directly from the insured. So they're skipping this part here and they're going straight from provider to insured. And a lot of times they market this as quote unquote no fee and a direct buyer. Now, I think that term is a little bit misleading because they are in the business of quote unquote warehousing. So what they're trying to do is buy the policy for as little money as possible to get the transaction done. Then they'll hold it for 2, 3, 4 months, and then they'll resell it to someone else at a premium. So when they say there's no fee, it's really like there's no stated fee. But what they're doing is they're discounting the purchase price that they're willing to buy it for so that they can flip it later. So there's a lack of transparency on what that actually costs to the consumer, and you're not getting multiple bids to make sure that you're getting the right price. The other way is the traditional life settlement broker model. Now, in the United States, it's typically the rules are that you need to, if you're a quote unquote broker, you need to send it to at least 3 providers to make sure that you are getting price discovery. And those providers then send it to the funds that they have. Sometimes providers represent one fund, sometimes providers represent multiple funds. But that's how it works, and the rule is 3. We operate a bit differently. So we've created the Harbor Life Exchange, which has 19 providers on it and an additional 30 funds on top of the providers. So when we work a policy, we like to think of it like MLS, where instead of just going to a few buyers for a few bids, we try and get as many institutional capital eyeballs on the policies at once to try and drive up the price for the insured. Higher price means higher commission, better family outcome, and just everyone wins.